Hi. Today I'm going to talk about open enrollment, qualifying events, and exceptions. And it can be very confusing to understand exactly when we can add dependents and when we have to wait for open enrollment. First off, during open enrollment, the enrollment is open. So that means that there's no underwriting required, there's no special exceptions, there's no qualifying event needed. During open enrollment, the employee can add or remove dependents without any questions asked from the carrier. And open enrollment is usually the month before their renewal. So if someone is renewing in the month of June, their open enrollment period is usually 30 days before their renewal. So if they're June 1st, it would be May 1st through May 31st. Okay. And sometimes carriers even have leave the client the entire month of the renewal for open enrollment. So for example, Anthem Blue Cross of California allows the month prior and the month of. So in the June example, if you have a June 1st renewal, the open enrollment would go from May 1st through the end of June. So June 30th would be the last day. Anything after that, the carrier can say no to if there's no qualifying event and no paperwork was submitted prior to the 30th of June. And many carriers are very strict about this. And if, let's say, we have an employee who wants to add a dependent and they tell us on the 4th of July and their renewal was June 1st, the carrier has the right to say no. Now, in most cases, like with an Anthem or Blue Cross or Blue Shield, they usually have this 60-day window where they are a little bit loose. So in this example, they would probably allow us through the end of July, and probably allow that employee to make that change. And in that case, they would backdate premium, which most employees are not too happy about. And what I mean by that is, let's say John Anderson wants to add his spouse, and he doesn't tell us until July 4th, and his renewal was June 1st. Well, when that spouse is added, most likely there will be some additional payroll deductions he will be responsible for. So even though he's telling us in July that he wants to add the dependent, it's going to be backdated to June 1st. So he's going to have that entire catch-up month either spread throughout the year or one catch-up payment deducted out of his paycheck. And it's usually up to the HR manager and similar cases that they've had in the past that have set precedent as to how the HR manager is going to handle that in payroll. Most HR managers either decide to have one big catch-up payment or they'll spread it out throughout the year. So they'll add that additional, let's say, $100 a month to add the spouse and spread that out through all of their payroll deductions throughout the year. That's about open enrollment, all the nuances that can happen in and around adding a dependent around open enrollment. Now let's pretend we're outside of open enrollment and the group, let's say, renewed January 1st. And John Anderson comes to us July 1st and wants to add his spouse. Initially, the response would be no, you have to wait until next open enrollment. However, if John Anderson had just gotten married, if he had a qualifying event like getting married, that would allow him 30 days to add the spouse. So let's say he got married on July 4th, and that spouse could come on usually on first of the month following the qualifying event date. The qualifying event date would be July 4th because that would be the date that he got married, and then it's usually first of the month following that event date. So the spouse would come on August 1st in this example, and that would be a qualifying event, the marriage. There are other qualifying events, like let's say the spouse lost her coverage through her employer, and a loss of coverage is a qualifying event. So let's say this spouse left his or her job, and that was on July 4th. They quit their job, and therefore their benefits are going to be ending at the end of July. Okay, so that would be a qualifying event for the spouse to be added to John Anderson's plan. So that is a qualifying event. So a loss of coverage, or a special event like a marriage or a child's birth, having a baby in the middle of the plan year. They're not going to tell the baby, they have to wait till open enrollment, things like that. Now, there are also exceptions. Every rule has an exception, even in insurance. And these come up usually because paperwork was submitted and perhaps the carrier didn't process the paperwork, or the employer received the paperwork and didn't submit it on time. There was a breakdown in communication somewhere along the way, either between the employee and the employer, or the employer and the insurance company. And in the case of an exception, we would need a paper trail showing that the employee or the employer submitted paperwork to the insurance carrier within the allotted time, either around the open enrollment or around the qualifying event. And it usually, again, has to be within that 30 to 60 days of the event for the carrier to acknowledge it. So one thing that has happened over the years, not as much anymore because we don't really use faxes too often, fortunately, anymore. But back in the day, we used to have to fax everything into the insurance carrier. And oftentimes that insurance carrier would not receive the application, or they would receive partial application. And in those cases, we could call the insurance company, find out what information was missing, and get them over the complete application. And we would use our fax confirmation page to prove that we submitted the application in a timely manner. So similar to today, those usually happen via email, but honestly, most of it is all done electronically over a website or a system. But sometimes we do still email in applications, usually for qualifying events, but I digress. And let's say the insurance carrier didn't acknowledge the receipt for whatever reason, we can go back and show the carrier that we did submit the application to the appropriate email address and get the qualifying event or the open enrollment change processed that way. So exceptions can be a little bit squirrely. It depends on the documentation that we have and the carrier that we're working with. Oftentimes, dental and vision carriers are a lot more graceful, give you more grace, more wiggle room with their exceptions than a medical carrier, a life insurance carrier, or a disability carrier. The medical and life and disability carriers have a lot more strict rules about enrollments and terminations and documentation than a dental or vision. Dental or vision plans, usually it is pretty easy to get them to push exceptions through. We have to notate that the insured or the employer is aware that they are going to backdate the coverage and charge additional premiums on the next invoice. And we sometimes do need to get letters agreeing to that from the insured or from the employer. But aside from that, dental and vision is relatively easy to get exceptions through. It comes down, there are a lot more hard no's when it comes to health insurance, in particular to adding dependents or adding outside of a qualifying event or adding outside of open enrollment. So I hope that brought some clarity to open enrollment, adds and changes, qualifying event, adds and changes, and exceptions. If you have any other questions, please submit them to me. I love getting your questions. And you can make a comment down below, or I have a link down below where you can fill out a very brief questionnaire to get access to me for up to 30 minutes. And love to hear from you. And again, we'll see you next time.